Hey everybody, welcome back to Crypto Buzz Daily. Today is Tuesday, July 22nd, and today we're diving into some growing intersection between crypto and traditional banking, and I promise it's more exciting than it sounds. We've got some big updates from JPMorgan, a push in Congress for new legislation, and even Dogecoin making tech upgrades. And finally, we've got PNC and Coinbase partnering. That's probably the biggest story of today, but let's just go ahead and dive right in. For our first story, we have JPMorgan. They are actively exploring crypto-backed loans using real Bitcoin and Ethereum, not just derivatives or ETFs. And this could roll out as soon as this year. But what does this exactly mean? Let's say you own $50,000 worth of Bitcoin, but you don't want to sell it because you believe it'll go up, or you don't want to, pay capital gains on it right now. With a crypto-backed loan, you could use that Bitcoin as collateral to borrow, say, $30,000 in cash, and that way you keep your crypto, you use the cash, and repay it over time. It's kind of like getting a home equity loan, but instead of using your home, you're using crypto. But why are they doing this now? The simple word is demand. Institutions and retail investors want access to more crypto-backed services, and they want them through regulated, trusted providers. JP Morgan does not want to miss out on this opportunity. They already offer loans backed by crypto ETFs. The next step is just actual coins, which is quite a bit more direct and risky, but it's also where the real action is at. And what about that Bitcoin fraud thing? In the article from Cointelegraph, it says, in previous years, Diamond had expressed anti-crypto sentiments. In 2017, he called crypto a fraud during a company meeting, saying that he would fire any employee trading Bitcoin on company accounts. In 2018, Diamond, which I may be pronouncing his name wrong, I'm not quite sure, criticized crypto during an event, calling it a scam, saying he had no interest in it. In 2022, he made more anti-crypto remarks, calling digital assets decentralized Ponzi schemes. Despite this, he commented positively on blockchain, decentralized finance, or DeFi, and smart contracts, tokens that do something. According to the Financial Times report, the unidentified source said that Diamond's earlier Bitcoin comments had alienated potential clients who made their money through crypto or were longtime believers in the asset. So what about that fraud thing? Him being one of crypto's loudest critics has made not a full turnaround, but like many big players, his tune has changed. He still says he's not a fan of crypto personally, but JP Morgan is clearly moving full speed into the space. So the moral of the story is watch what they do, not what they say. Moving on, we have another story, focused more on regulation. This week, a group of U.S. senators, including some of which who have been pretty critical of crypto in the past, released a draft bill that might finally bring much needed clarity to the space. The goals of this bill are to define which digital asset count as commodities versus securities, set clear rules about who should oversee what, should it be the SEC, the CFTC, or a new office entirely, make stablecoins like USDC fully backed, audited, and transparent. And in an article by Crypto Slate, we see here it says, on July 22nd, Senators Tim Scott, Cynthia Lummis, Bill Hagerty, and Bernie Moreno, may have pronounced one of those wrong, I'm not quite sure, released a draft version of the Responsible Financial Innovation Act of 2025. That's a mouthful, by the way. To solicit public feedback, the proposed legislation builds on the Clarity Act, recently passed in the House, and focuses on strengthening market structure, protecting consumers, and enhancing regulatory oversight. The senators said the bill addresses key areas such as banking, disclosures, securities, classification, and anti-illicit finance measures. Commenting on the initiative, Senator Lummis emphasized the urgency of regulatory clarity to bolster the growth of the emerging industry in the U.S. According to the lawmaker, we cannot allow regulatory confusion to continue driving American innovation overseas. Market structure legislation will establish clear distinctions between digital asset securities and commodities, modernize our regulatory framework, and position the United States as the global leader in digital asset innovation. I don't know about you, but that is exactly what I want to hear. This bill aims to create legal framework so that big banks can confidently enter the crypto space, startups aren't crushed by lawsuits, and everyday people can invest without worrying they're accidentally breaking laws. It's still in draft form, but the fact that regulators in Congress are finally aligning tells us something big. Crypto's not going away, it's becoming institutional. Now let's talk about Dogecoin. Dogecoin is still alive and well. In fact, they're preparing for a serious tech upgrade involving something called zero knowledge proofs, ZK tech. ZK-proof technology lets you prove something is true without revealing why or how you know it. It's big in privacy, scalability, and speed. Projects like ZK Sync and Starkware already use it in Ethereum, and now Dogecoin is jumping on board. Here's what they want to do. They want to make Dogecoin faster, more secure, and harder to track without sacrificing its simplicity. And it's the team behind popular MyDoge wallet who's leading the charge. On top of this, in this article posted by the blog, what we see here almost at the very end of it, it says Doge is trading at 26 cents, down about 4% on the day. It hit a high of 71 cents in May of 2012, but according to the blog's price page, on Monday though, penny stock firm BitOrigin bought its first tranche of Doge after it secured up to $500 million in equity and debt to launch a corporate Dogecoin treasury. That's a pretty big deal, guys. So why does all this matter? The joke coin is growing up, because if it wants to survive long term, it needs to innovate. And this might actually make Dogecoin more usable for payments in everyday life, not just for the memes. Finally, we have an article, like I said, posted by the blog about PNC striking a deal with Coinbase. I would say this is probably the most underrated news of the week. This means you won't need to transfer money out of your bank to buy crypto. Rather, you can buy, sell, and track everything within your bank's app, specifically PNC. This partnership also signals that crypto isn't just some fringe thing anymore. Coinbase is becoming the crypto layer beneath many banks, offering them a plug-and-play solution to bring crypto to the masses. For older, less tech-savvy customers, this could be huge. It brings crypto where people already do their banking, making it simple and, more importantly, safe feeling. If your grandma wants to buy a little Bitcoin, she doesn't need a ledger or a wallet or a 12-word seed phrase. She just clicks a button in her PNC app, and boom. It's crypto onboarding by stealth. So what's the trend between all of these stories? What are we seeing here? For one, we're seeing big banks like JPMorgan and PNC are no longer ignoring crypto, but they're rather incorporating it into their services. The government is finally stepping in to add rules and regulation to protect consumers and allow innovation. Crypto tech is being upgraded in real time, even for meme coins like Dogecoin. We're leaving the Wild West phase of crypto behind and entering infrastructure phase. Loans, payments, regulations, bank integrations. Crypto as a speculative gamble is fading. Crypto as an everyday bank level, bill paying financial tool, that's where we're headed. Anyways, that's all for today, guys. Though, if you like these kind of videos, make sure you like, subscribe, comment your thoughts. Where do you guys think we're going in the crypto space in the next couple years? Anyways, we'll see you guys tomorrow. Thanks for watching.